Hey everybody, what's going on? It is James here with Crypto Common Sense, and seeing as how it is February 1st, I thought I would sit down and give you my 2 cents on the market rather quickly this morning. So before I jump into the content, please remember, I'm just some guy. I'm sitting in a spare bedroom. That means that nothing in the video is financial advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. So let's dive into this. First things first, I do want to kind of give you guys a heads up. I don't think I'm going to do a lot of videos this year on YouTube. I'll probably try to do at least one, maybe two a month. But I really have decided that I want to focus my energy on the people that are supporting me. And so that's obviously going to be, paying students and paying subscribers of my software and things like that. I feel like sometimes they get neglected because I'm doing so much free stuff that I don't do all the stuff that I want to do for them. Not so much the last 6 months or so, but like the first few years I was doing that stuff. I was doing a video on YouTube every single day. So just want to give you guys a heads up on that. The other thing I want to quickly mention is, I keep doing these surveys once in a while, kind of asking people like, hey, where you stuck at, what's stopping you, all these things. And it seems like, and I did one yesterday, I didn't get a whole lot of responses yet, so I don't know what it's going to look like when it's done. But I already saw a few people mentioning time. All right, so I got to rambling, going to cut all that out. So there might be a little bit of an abrupt change in pace here in the video. But bottom line is this. If you're somebody who feels like you don't have time, or you feel like, well, I don't know technical analysis, that's the whole reason that I created the indicators, right? It's the whole reason. And so if you're somebody that just doesn't want to, jump through hoops learning a bunch of TA, you don't need to. This is a 4-hour Bitcoin chart. This is the default settings that I teach to use with 4-hour charts. And you can see that right there is the buy signal on Bitcoin. It came in the afternoon of Tuesday, January the 10th. And one of the strategies that I teach is when one of these signals comes in, go look at the last pivot and use it for a stop loss, right? And it gets a little more detailed than that. You'll notice this is not the exact pivot. But like in this case, that would have gave somebody about a 2%, 2.3% stop loss. And if they're still sitting in the trade, which they should be, if they're following what I teach, then they're up 14R. Now I want to put that in perspective because not everybody understands this, like 14R. They'll look at this and say, oh, they're up 32%. No, they're not. Percents do not matter. We don't care anything about percents as a trader. They are up 14R. If you're a trader, you should be risking, taking consistent risk on every trade. So you will have a number that this is how much I should risk on a trade. And so that's your R. That's what R means, is risk. So if your risk is $100 per trade, you're risking $100, that's 1R. That means on this trade, if you were risking $100 and you were up 14R, you would be up $1,400. If you're okay risking $1,000 on this trade, meaning if you got stopped out, you lost $1,000, then you'd currently be up roughly $14,000 if you were inside of this trade, right? This is very, very basic, very, very simple stuff that pretty much anybody can do. And if you're somebody that's short on time, this is a 4-hour chart. So all you do is you go up here. Once you have the indicator, you click on alert. All right, my internet acted up a little bit there. So you go up there, you click on alert. You select Racing Rabbit from the drop-down list. You select whether it's a buy alert or a sell alert you're looking for. Once per bar close, then you type in your message and you'll get an alert when that goes off. And then you can go in there and check it out. And because it's a 4-hour chart, it's not like a 1-minute chart or a 5-minute chart where you got to be Johnny on the spot, right? As long as you're going to be able to get to the chart sometime in the next few hours, next 12 hours for sure, then you're fine. Like in this case, it came in here. So it would have came in at 2 p.m. Central Time. And look at this, 1, 2, 3, 4, 5. It was 6 candles later, so basically a full day later before it finally broke out. So you had a full day that you could have gotten long on that signal. And some people might say, oh, James, you're cherry picking. They don't all look that good. No, of course they don't all look that good. But most of them look pretty good, right? There's the buy. The sell would have been probably a loser. It looks like it went down after that, but the way I teach to trade it, this probably would have been stopped out. So just kind of teaching you some trading real quick, whether you're using an indicator or not. So if somebody makes 14R here, they're going to lose 1R on something like that because it went against them. They're going to lose 1R on something like that because it looks like it went up. It probably wouldn't have went up enough to hit the profit target, right? You could cherry pick and say we would have closed it. Let's just say we wouldn't have. Let's say we took a stop on it. Okay, well, look at this. That's a huge winner right there. Is it not? This is probably a good winner. We can even call it a loss. Who cares? That's a huge winner, isn't it? And this, and that, and that, and that. See what I'm saying? Like, you just have to understand, and how about that sell, and how about this buy in December of 2020, so on and so forth, okay? What you have to understand about trading is it's a math game. It's all it is. It's a math game, right? You don't have to be great at math or anything like that. You just have to understand that it's not what people think. Common sense says this is a 30% win. It's not. If you're a trader and you're trading properly, it's a 14R win currently, right? Depending on whether it keeps going up or whether it pulls back and hits the trailing stop, all that kind of stuff. And so you don't have to take very many of these types of trades to do very, very well for yourself if you're winning. And how many do you have to win? What, 1 out of 4? 1 out of 5 to be very happy? If you're making 10R plus on a winner, you can lose most of your trades. Even if you're only making 3R on average per trade, which means you make 3 times as much as you risk, you can actually lose 70% of your trades and be a wildly successful trader if you're making 3 times as much when you're right as you're losing when you're wrong, and you're losing consistent risk. All right. You don't need to be, some whiz kid at math or some whiz kid at, quantitative programming or any of this stuff. You don't need to be somebody that is a chart savant. You just need the really, really simple stuff, right? And you can go out there and learn it on your own. And I think it's a great idea. Or if you want to skip that learning curve, that's what the indicators do, is they're just basically reading TA and printing, what I feel are edges in the market. That's all this is, right? It's the stuff that I trade. I did the best I could to code it into an algorithm, and it's basically saying, hey, this looks like there's an edge for the bulls, or it looks like there's an edge to the bears, okay? So I don't know how long the video is because I'm going to be cutting out a lot of my rambling, but I do want to at least give it a quick once over to a couple of larger time frames, and I'm going to actually start on stocks just real quickly. So if we're looking at a US 100 chart, I keep seeing articles on the news talking about, the market just had its best January in like 22 years or something. Okay. There's a huge problem with that. What they're talking about is the January after the dot-com bubble. Why was there a huge January? Well, because the market went too far too fast. It paused, had a bear market rally. Bear market rallies are often really strong. And then what happened? Like they're not talking about what happened next. Look at this. NASDAQ on track for biggest January since 2001. Now this was a few days ago when I took that screenshot. Now it's obviously closed. Okay. This green candle right here, that's January of 2001. Yeah, I don't know about you, but I wouldn't want to be buying there when it fell an additional 69% after that. History is not guaranteed to repeat, but don't fall victim. I talked about this in the last video about how the media loves to, really push these narratives. Don't pay any attention to what they're saying. Whether this is a big month or small month, or none of that stuff matters. What matters is what's going on in the chart. You can have a big month and it can be bearish. You can have a big month and it can be bullish. Okay, so that means nothing. So you see articles about that, ignore it. So what is happening in the NASDAQ? Well, I think it's entirely possible that we haven't yet reached complacency in the stock market. Okay. I'm not saying that, you should be long or short or anything like that. Again, I'll leave that up to you. What I will say is this is putting in a W on a weekly time frame, right? It is trying to confirm that W. W's tend to be reversal signals. And so it's entirely possible that this rally has yet to fizzle out. Now, I think some of that is going to come down to what the Fed does today, right? They're going to be announcing the rate hikes and things like that. I think it'll kind of set the tone. And so if that goes as expected or better, then this rally could really gain some steam. If it doesn't go well, then of course the market may not move much further up from here. But if you all remember, there was a chart that I had posted many months ago. It was a RUA chart. And the RUA chart was a market cycle chart based on just that old bubble chart. And it looked like this. At the time, we were back here somewhere. But I still think it's entirely possible that everything that's been happening since October is actually like this was October here, and that we're actually in the complacency phase where everybody thinks, hey, we just had to cool off. We're going to go back up from here. And the stock market moves so much slower than what people in crypto are used to. People in crypto are used to these entire cycles playing out in 10 or 12 months. But if you go back and look, that's not the case with the stock market, right? If you look at the dot-com bubble, it actually took about 3 years to really play out before it bottomed, right? You're talking about from like early 2000 to October of 2002 on the RUA, right? So about 31 months. The financial crisis of 2007, 2008, it played out in about 17 months, okay? We have been in this current cycle, whatever you want to call it, for about 12 months. So that would be a much shorter cycle than what the stock market is used to. And I know some of you are watching this going, James, I don't care about stocks, but you should, because Bitcoin has proven that it's a correlated asset. And so you can't, in my mind, justifiably be bullish on Bitcoin if you're bearish on stocks, and vice versa. If you're bearish on stocks, if you're bullish on stocks, you can't be bearish on Bitcoin. I think they go hand in hand. And so if this is a complacency bounce, and again, if it is, it could still go much higher than this, right? A complacency bounce could go all the way back up, for example, and hit the 61.8, which would be way up here, right? Another, on the RUA, that'd be another, 6-7% that could move up. And if so, then of course I think Bitcoin will enjoy that little free ride. Now, if it fizzles out, exact opposite. So be very, very aware of this, okay? If we go and we look at a market cycle chart of Bitcoin versus the QQQ, right, which is known as a relative strength chart, where we're measuring the relative strength of Bitcoin versus the QQQ or the tech cycle, sector. I posted this up a few weeks ago on social media. One of the few posts I haven't put on social media. And let's make this a little smaller so you can see it better. It's just following basic technical analysis. So this was the bubble, right? I posted this in November of 2021 saying, don't hate me. This is what I'm saying. Here's complacency, right? Here's our denial bounce. And this, I think there's two possibilities for this down here. I'll talk about both of them. So the bearish possibility is this. Now again, I posted this a few weeks ago talking about when it came up to this line, that would be the line in the sand. And that, the moment of truth, basically. Well, so far, it literally kissed it and then just moved off of it. All right, so far, that's not what bulls want to see. And no, I didn't move the line. That's literally where the line was. It just touched it and moved off of it. So one possibility is this is anger. And if we're in anger, blow this back up. Look at this. That means we'd be down here somewhere, right? And that means that we'd have this dead cat bounce. And again, this isn't like, you can't go like candle by candle. It's not always going to play out exactly the same. It's just a general idea, right? But in this bubble cycle, you get the bounce, the dead cat bounce after anger, and then you get the final depression phase, which is when a lot of the big money is accumulating, Okay. So this is one possibility, that this is anger, the way I have it mocked up, that this is our dead cat bounce, and then we have to go down to depression. The other thing is possible, though, and you should always keep an open mind. This is why you should never put all your eggs in one basket. It's why risk management is so important. The other thing is, it is possible that maybe anger was actually right here. If you look at that, that means that, this was anger, and that this bounce up was actually this bounce up. And then instead of getting this long drawn out move down, it just got this straight move down. That's possible, right? In which case, we're actually over here now, like maybe even starting this. I don't believe that. That's not what I think. I think it's more likely that this was anger and that we're up in this area right here, okay? And that we have one more move down versus the QQQ. That's what I believe. But time will tell, time will tell. Anyway, video's way too long. It's after 8 o'clock. Market's going to be opening in less than 20 minutes, so I need to get on the ball here. But I'm going to wrap it up there. Like I said at the beginning of the video, I am just some guy. I'm sitting in a spare bedroom. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable asset. Also, remember, if you're short on time, you don't want to learn a bunch of technical analysis, but you want to take advantage of these moves in the market, you can always join my training and my indicators. Of course, those indicators will give you buy and sell signals on the chart. You can set those up to get alerts and then act on those as you feel appropriate. All right, this is James with Crypto Common Sense, reminding everyone, please trade safe. I'll talk to you soon.